CFTC Rule 4.41. These results are based on simulated or hypothetical performance results that have certain inherent limitations. Unlike the results shown in an actual performance record, these results do not represent actual trading. Also, because these trades have not actually been executed, these results may have under- or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated or hypothetical trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to these being shown.
Okay, so let me just continue on this for a moment, and then some of the questions are coming in. Good. So really getting to grips with this and understanding 6 ways is fundamental to your trading success. And I know that when I mentioned the other week, would you like a room which is dedicated, say, on a Sunday night or a Monday to opportunities coming up in the week, but it would be for swing trading. When I say swing trading, I mean anything from 1 to 10 days, trading days. Some of you would call that position trading, but I don't. I call it swing trading. It is all based around the dot and understanding what the dot's doing. And of course, this white dot here is the Hawkeye trend, which I've just turned off and turned the stops off and turned the up and down colors just to white. And that tells me exactly what's happening. So for example, let's come over to here. We know where we are, don't we? We know that the pound Aussie is in an uptrend on the daily, and we know that the lower vibration is going up and down the 133 minute. That really doesn't work on the currency, so let me take that to a 480 minute, which is a third of a day. So here you can see that it's all clicked in. And now, to overcome the biggest problem that all traders have at the beginning of their career, or even in the middle of their career, to be able to hold trends. So few traders hold trends. And I think I said the other week I was speaking to a pal of mine who was a trader and then became a broker, and I was talking to him and I said, you know, why did you become a broker? This is an old story. It's not something that's happened right now. He said, well, he said, I really wanted to become a broker in a brokerage house to see what the successful traders had that I didn't have. And he said they didn't have anything except the ability to hold trends. He said they would all be up 500, down 200, down 500, up 100, up 1,000, down 700, down 1,000, up 200. He said, but then suddenly they'd be up 6,000, they'd be up 12,000, whereas the other traders were still nickel and diming and slowly went away, whereas the successful traders managed to hit those trend runs. And we can go down any of these and have a look, and you can just see by understanding these 6 ways. I mean, if I was on a desert island and I had a calculator to work out the dot, that's all I would need to be able to be a successful trader. You know, obviously my volume is important to me, but price is equally as important, and price movement. That's all that you would need to be able to do this and be able to follow this through. And you know, but just coming in, you can see time and time again. Look at this right down the bottom. You know the pivot lows in there. You know that the markets should react, and it does react, and the trend dot goes dot. It goes dot. The trend dot goes flat, as opposed to here, it still carries on going on. Bang bang is a sign of weakness. When you get one down, one up, sign of weakness. There it comes down. There you've got it up here starting to roll. There's your break. If you put that on there, you've got it over here on the 480, and you can see the 480 coming in on this trend and holding you all the way up for a substantial amount of money. I mean, that's 700 odd pips, that movement just there. You know, and that's what you're meant to be doing and what you're meant to be looking for. And you can achieve that by stripping yourself bare of your indicators, learning 6 ways, having your 2 time frames up, and seeing it run. And that is how the SIX market moves. So promise me that you'll all learn how to do this. Now I'm going to look at some of the questions that are coming in. Can you cover ES? Yes, I will. Is there a plan to make the indicators more friendly? Example, to allow changing colors from format functions in TradeStation. Also the functions to allow different inputs. That's from Romanus. Well, you can change the colors of the indicators very easily in TradeStation and the other platforms. They don't have to be red or green. You can change them to whatever you like. And I'll go in and do that in a moment. Is the recorder on, Jeffrey? Well, thank you. I just put it on. Can you please publish a trading planner with rules for intraday trading of the ES using tick charts? From Jim. Jim, we've got something on our members area in that, but I will do more on this. Come September, oh well, it's September now, but come this month there are quite a few things happening in Hawkeye, and if they work out as planned, there will be a lot more education coming your way. David, can you explain how the volume indicator identifies a safe entry point, please? Yes. How is Apple doing? I'll look at that. Douglas, you're an amusing man. Thank you very much. They're in the members area. There is a PDF and also this coming newsletter that's coming out this week to you, excuse me, will also have that PDF in there. But I do want to do a specific session on 6 ways, but I just know that it bores the crap out of people, and it shouldn't do. It really is. Dearie me, what's gone wrong with me today? So let me now just push these questions back over here and go and show you some stuff that I wanted to. First of all, I just want to give you a tease of what's coming up with Marcus. I showed you that a little bit yesterday, but he's done phenomenal work. Marcus Toombs starts up in October, and this is our matrix, our grid. We were going to call it the Hawkeye War Paint or Tomahawk War Paint. It shows us which currencies to trade. So you can see that the British pound is all lit up here, and the yen is all out, no colours apart from New Zealand's, and that's gone all black. So that's telling us that the pounds and the New Zealand and the yens rather would be the two to trade, because they're showing total strength and total weakness. And that tied in with the heat map over here, the fat man over here really starts to crunch it along. So that's coming up later. And for example, that just showed us that the pound yen or the euro yen even. So if I just bring this across to you, it'll show you here is the euro yen for us, and there's the buy which was identified over there. I don't want to get too tied up in what's coming, because you will get a full presentation from us later on in the month when we're all ready to fire off with it. But it is working out very well. So that's that. Now, let me just come back, and somebody asked me about volume. The best way for all the volume is to use triple time frame. And when I, who was it who asked me? David. what I'm looking for is triple time frame volume. So I always start off on my slowest time frame first. In this case, it's monthly, which is terribly slow, but it's the same principle on any of the time frames. So on my slowest time frame, I want to see that there's a white, or in the direction of the color that I'm going, red, volume going through. When there's white, it's showing me that there's no demand. And somebody yesterday asked me, well, what does no demand mean? Well, it means that for that bar that occurred, which came in last month, let me just expand this up so you can see it. This bar here, let me just turn that to a pointer. So this bar here is just telling me that for the profile of that bar, there should have been more volume, and the profile of where it closed to the open, closed on the low, closed under the open, which was virtually up near the high, there should have been more volume in that move down for it to generate red selling volume. And if it also looks at previous bars, it goes back 20 odd bars, so it's also looking at that in relationship to all of this. It took me hundreds and hundreds of hours to do this algorithm, and it really is leading edge stuff as far as I'm concerned. Some of you might not think, but it is as far as I'm concerned. So, David, I can see that on my slow time frame I have white, no demand volume. On my last weekly time frame I had red selling volume that came in on that bar. And then I come over here and I can see that I've got classic distribution volume, and when I say distribution volume, it's choppy. All through here it's choppy until we get to here, and now you can see I've got 1, 2, 3, 4, 5, 6, 7, 8 bars of selling volume, 1 bar of no demand volume. So when that indicator came in here telling me, hey, this market, which is gold on the daily, is going short, it was set up for me. That gave me a low risk entry off these other time frames because I had all my volumes going with me. I had weekly selling volume, I have monthly no demand volume, and I have daily 6 bars, 7 bars of selling volume, and then the price comes out and starts to move down. That is the setups that I'm looking for across all time frames. Somebody asked me about Apple. How about Apple? That's for Ray. Well, Ray, why don't we start by looking at the slow time frame first, and you can see that there's red selling volume going all the way through there, and I think if I just expand that up a little bit, there's a tiny little bit of buying volume that came in last week, but is minimal and it's nothing. So the bias is to the downside here. My heat map is showing that bias to the downside. My weekly is showing me again declining low volumes, which you would expect at this time of year, and no demand volume on the last bar last week. And I can also see that I've got a pivot high up here, which is the yellow dot pushing this down. Now when I drill back into the daily, I can see exactly what's going on. I've got, again, just like gold, 1, 2, 3, 4, 5, 6, 7 days of selling volume with 1 day of no demand volume. It's broken out here, but the trend hasn't gone. And why hasn't the trend gone? Everything is in place for the trend to go, except for one criteria. And when I was doing a lot of work with my original partner on Hawkeye, Bob Sager, we were doing programming, seems a lifetime ago. Just this simple rule saved us so many times, and that the close, when you change from a trend color, and a trend color be a white to a red, or a green to a white, or a whatever it might be, a green to red, the bar has to be, as we're going down here, The bar has to be the close, has to be less than the open, and in the bottom 40% of the range of the bar. Now that didn't happen there. It closed above the open, so forget it. This one closed above the open, didn't click in. This one is going up, so maybe it's going to close above the open, didn't click in. As soon as it clicks underneath the open and everything else is in place, it'll click itself in and that trend will go red. So on Apple, the bias is to the downside. At the moment it's going through its congestion area over here. Now although the trend dots are going down, I say congestion only because of those profiles I've given you just there on the actual bar. So as soon as this closes under its open, it will start to come down. Let me just read another question. Unfortunately, in GoToWebinar, which we use, you can't increase the font size. So I can't sit back and read the questions. I have to come up. Pleasure, Ray. Let's explain. Yeah, good morning. I'm one of your 10 beta testers, just so if you're able to cover and possible testing restart date. Yes, I don't think we're going to beta now. I think we've done so much work. The beta, guys, we set up a beta for the Tomahawk, which is coming in October, which was very, very, very useful, and it certainly did what it was meant to do. It sorted Marcus out. And it particularly helped Marcus in running a room and realizing the difficulties of trading and running a room and having too much going on in front of you, both in indicators and also the presence of the room. And also he was getting confused, if I could say that, and I know he's in the room and he won't mind me saying this, between trading and trying to educate. The room is a straight trading room. It's not an education room. So that was a great lesson for him. We've been trading this ourselves. We're very happy with it. So it'll be going straight live. And of course, you guys who helped on the beta tester have a present from us when that starts. Hi Linda, how are you? Nice to see that you're in the room. I will pull over crude at some stage if I have time. Yes, it is being recorded. If you want to get the recording, you've got to email team1@hawkeyetraders.com and request it. It won't be posted, so you've got to request it. Okay, somebody wants an entry with roadkill. That's no problems. We'll do that. Okay, I want to show you something else, because when you come to these rooms, and there's loads of you in here, which pleases me enormously. I want to show you something that I really, really like. I have mentioned to you looking at dailies and weeklies and looking at 480 minutes on forex. First of all, I don't want to talk through this if it's boring. People in the room wanting to see forex? Just type in yes if you want to see forex. Okay, all right. Loads of you, thanks very much. So what I'm doing here, this is a daily fat man, and you all know the colors by now on the fat man. If you don't, you can always hit that indicator, that icon up there, and they will tell you what colors. New Zealand's I've made white only so that you can see it on the screens, and it's dotted. So the dotted one here is the New Zealand, because the blue doesn't show up for a lot of people when I'm doing these broadcasts. So what I'm really looking for here is to see when the trends are coming in. And this is such a simple system. And Jeffrey, I know that you've been hunting around and trying a lot on your systems and systemizing the Hawkeye. Just have a look at this. If you can go and trade these 480 minutes, let me just run you through. So Aussie CAD, nothing happening. Now there was something that came in here. Would that have been elected? Aussie Swiss. Well, at that point, the Aussie, which is the red line here, is right down at the bottom, and the Swiss, which is the solid white line here, is declining. So you could have had that. You could have said, yes, I'm going long there. Then we look at the Aussie Yen. Again, that point of entry that came in here, would we have it? Well, we can see the Yen, which is the magenta line coming down here, is pretty steep, and we can see that the Aussie is rising from being just touching the oversold base. Great. As soon as the Yen gets down to the bottom here, one would be tightening up, but there was a valid entry there. Let's have a look at the Aussie New Zealand. Well, the Aussie New Zealand, that came in right up here, and you can see that the Aussie started to go down here. There's the Aussie, the red, and the New Zealand didn't allow it because it was rolling over as well. But when we get to that point there, you could have done it, and you would have had that out of it, which is still 150 pips, I think. Aussie US, you can just see that we had that as well. There's the US going up from that point, and the Aussie was coming down to that point, and you'd be coming out as that starts to curl. I'll just rattle on a little bit because I don't want to spend all the time doing this, but I think that you get the idea. So let's look at this. Here we have the British pound, which is the brown line, going up at a very steep angle, and we have the euro, which is this green line, coming down from overbought rather, at a steep angle. Great entry, and look what you click out of that. You know, that's 300 odd pips there. So go away and look at that. Look at the 480 minute against a daily fat man, and look at the setups and just work on something simple. So that's that one. Let me just take some more, look at some more questions, and they're coming in. In your opinion, do you think that trading forex is riskier than trading commodities, or is the risk equal either way? That's from Ray. Ray, that's a good question. There is risk on all of the markets, and you mentioned the most important thing. We are but only trading risk. We're not trading forex, we're not trading commodities, corn, whatever it is. We are just trading risk, and that is why you have to have multiple time frames to look at to minimize the risks that are coming your way. And the forex, you have more volatility in because you get more news coming out than the commodities. The commodities, you get violent volatility around crop reports and news, etc. I do a lot of commodity trading, and that's where I started, and that's where I really feel happy in. I do some forex trading, and I trade what I'm showing you now along with a weekly as well. I hold a lot of weekly positions on forex and will run those. So I don't think there's the risk is skewed between each of the markets, Ray, but you've got to get out to these longer time frames. If you're trading the really fast time frames on forex, you've got to be bloody skilled, I tell you. It's been fascinating, the journey that I've done with Marcus, because I don't do a lot of fast intraday trading on forex, and I went through it the learning curve with him of that high volatility, and really worked hard with him on how to iron it out and smooth it out, which we've managed to do. But it's a great skill set, and I always say, and for many of you, you've heard me say this before, one of the big mistakes of traders is that they trade too fast at time frames when they're starting to trade. And I liken it to riding a horse. You know, when you're learning to ride a horse, you get a pony, and then you get an old nag, and then you get something a bit faster, a bit faster, a bit faster. You don't go to the Kentucky Derby straight away riding a racehorse. And that's what traders are doing when they first open their account. They then start to trade a 5-minute or a 1-minute or a tick chart and this and that, and they just become cannon fodder, because it is very difficult. Remember what we're trying to do. We're trying to smooth out price volatility, and you do that first of all through time, through the time frame that you're trading. You smooth that out. If you're trading a 5-minute chart or a 3-minute, 1-minute, you're getting fast volatility coming into the market. You're getting a lot of whipsaw coming along. And then when you've done that, we're then looking at triple time frames. So you're looking at a let's say a 30-minute, a 60-minute, and a 180-minute, or a daily, weekly, monthly. So you're smoothing that out, and you're looking at the volumes of those extra time frames. And then you're putting your indicators, which are again smoothing. So the faster you go, it just becomes crazy. I used to, when I did a lot more seminars face-to-face, I had a balloon that I used to blow up, a tennis ball, and one of those hard little rubber balls like a golf ball, and I used to bounce the golf ball on the desk in the seminar room and say, this is a 5-minute. Now I'm going off to the hourly chart, which is the tennis ball, and now I'm going to the daily chart, which is the balloon. Which can I keep bouncing all day long? Obviously the balloon. The fast little one, I can't keep going all the time because it suddenly hits an angle and goes off and falls on the floor, etc. And that's exactly what's happening when you're doing your trading. I'm going to move off forex now. Somebody's asked me to look at the GB yen. No, it's a beautiful trade, isn't it? Who's asked me? Manny. Great trade, and look at the yen on the daily. Look at it just coming down, steep down, and look at the British pound, the brown going straight up. Look where we are over here. You know, low risk entry. You know what it's doing, and remember that this fat man is against all of the currencies, so the pound is getting strength against all of the currencies, not just the yen, and the yen is getting weak against all of the currencies. Remember what goes into them. All these currencies go into the calculations on this. They all go in, they're all weighted, they're all divided, etc., etc., and then they have the Hawkeye trend run through them. So that's what they're showing, and this is just a beautiful trade. And if you were able to hold the trend, and 6 ways of market moves just took you in here, gave it to you, you're going up, you know, you've gone into a bit of congestion here, you're banging yourself back out again, up it goes, and that's gone from 132, so that's 500 odd pips up there, you know. It's slightly better than hacking around for 10 pips on a fast time frame chart. So let me just come off this now, and we've got to read some questions, please. Jeffrey, your question, in the recent example of the FX, do you also use the daily time frame chart to make sure the volume and heat map are in sync with the 480 chart? Yes. Linda, yes, I will talk more about commodities. I'm coming onto that. Ray, I've answered that. Jim, yep, that'll be done, which was trading plans. There's got to be a lot more done on Hawkeye. I roadkill. That's somebody that asked me. So I'm going to do roadkill and then get into commodities. Okay, so let's go and have a look at, well, I can do roadkill. Let me do it on here. Okay, I've got everything on here, which is just fine. For the person who said to me, it would be nice to be able to alter colors, let me just show you. And this is in TradeStation. In Ninja, I'm sure it's the same. If you just go in and then go to color, you can see that the Hawkeye trend is green. Well, you can make that magenta. Let me just do that. And you can see it goes magenta. So you have total flexibility in what you're wanting to do by just going in and changing the color, the styles, etc. Yeah. So there we have, let me just see how I've got this set up. In the inputs on roadkill, you can do a lot. Now, that is no good on daily. Why? Because it's just bar interval times 2. Once you come up to daily, you have to then change this. So I now want to go to, say, what the weekly is showing. So I go slow bar interval 1, and I want to go week. So I want to see what the week is doing. So let's see what that is doing, and that is now showing me what the week is setting me up for, as opposed to bar interval 2. So anything on the daily, you use bar interval 2. So if you're on a 30-minute and you want to see what the 60-minute is, it's bar, and then the little asterisk above the 8 key, shift, get the asterisk in and put 2 in. So that shows you what the 60 minutes is doing. If you put 3 in, obviously it shows you what the 90 minutes doing. It's the multiple of your underlying chart. Here I'm wanting to see what the weekly is doing, and this is showing me that at this point here, that is giving me a volume setup. So my volumes are both the same, and the trend has just started. And then this is telling me that my trends, this green dot, is telling me that my trends have come. So my weekly trend is in, and my daily trend is in. So that tells me that there is a roadkill on that. And then these little gray ones here are telling me again that I've got volume aggressive entries. So let's say I missed that and I wanted to get in again, I'd come back in on a volume aggressive. And the volume aggressive is generated by the underlying chart, which is the daily in this instance, going from red back to green. So it's gone from red back to green, the close is greater than the open, etc. And all those rules are built in, and then that will come up. And then like over here, exactly the same. We've had some red volume, goes back to green, and we get an aggressive entry again. Now beware, I'll give you a caution on these entries. Be cautious of the further you get into a trend using the aggressives. I like just using probably the first aggressive as it comes in because it's a safe one. As the market progresses, the trend starts to expire, and as it starts to expire, you get more green red volume, so you'll get more aggressives as they come in. So just use the first one if you've missed getting in. So let's say there you wanted to get in, you missed that, there was another volume aggressive coming in here before the trend even clicked in. There's the trend one there. So you can come in on the volumes if you're aggressive, and there's nothing wrong with this entry off this volume because my trend of my weekly, and these dots here, have all gone white. So that is my weekly trend. So my weekly trend is neutral, it's in congestion. I then get buying coming in. This is my weekly volume, by the way. So you can see there's a lot of volume coming through there. And then this clicks in telling me all that it's all there, and up it goes. Now somebody was asking about Apple. Let's do it on Apple. And you can just see that on Apple we had a volume entry right back here, but it was against the trend of the weekly, which, you know, is taking on more risk, but that's up to you. Do you want to do that? Well, if you did, you had to eat it as it came down here and nearly hit your stops down here, but it didn't. And now we get another volume entry here because the trend has gone white, and it then comes back in, and we get another entry to get back in. If you weren't already in here, you got one there, which again is against the trend, but then look, the trend goes neutral, and then you get your entries up here, blah, blah, blah. So that's how that works through there. Let me just read some more questions, please. Susan, good question. Is the Fat Man indicator similar to the RSI indicator? For example, above 50 or midpoint, the uptrend accelerates, and if below 50, the downtrend accelerates. So if Fat Man is at the highest point, it's overbought, and at the bottom, it's oversold. The answer to that, Susan, is no and yes. If it is above the 75s and the 25s, let me just go to the Fat Man. Up here, if it goes above these levels and below these levels or touches it, we know that it's overbought, oversold. The middle line has nothing to do with it. In fact, I could take it out. It's just there as a graphic point for you to see where you are between those two lines. But of course, you've got to be careful, because sometimes you can be oversold and overbought. In this instance, you know, it carries on for a week. You know, that's 5 days up there, you know, like down here. But you can see that once it gets to these points, it doesn't take too long before they all start turning again, and off it goes. So that was a good question. Thank you. Douglas, it's a pleasure. Keep losing connection from S. McKinley. I'm sorry, I don't think that's me. Okay, let me carry on and look at the commodities and take you through these. So let's first of all start off on the bonds, and I'll work through all of these. And this is what I do every day. And I don't have any other chart that's different to what you're seeing here right now. And I just work through these and come up with the discussion in my head, all based around 6 ways a market moves. What are we in? Well, we're in uptrend on our monthly, but you can see that we're going to start pushing down. That there is a phantom isolated high. All of you guys know that a phantom isolated high is when we just look at what the high is doing. So the high is higher than that bar previous, and the high is higher than the next bar, and we don't take any account of the low. The low for a full isolated should have been higher than that low there. In this case it wasn't, but it's a phantom, which is about 80% as effective. So I know that that's going to be pushed down. I'm in congestion on my weekly, which is manifested huge over here coming across on my daily. I'll run through these quickly because they're all going to be much of a muchness. And you can just see it, well, these have got the pivots in. This is being pushed out. Would you have taken that? Well, you would on your volume stuff, you would have taken it. However, you are going against your 2 trends over here. So at this time of year you wouldn't. But if the market was fast, you would. I hate to say this because, you know, trading is an art form. It's like playing the piano. If you're tone deaf, I can give you sheet music, I can give you the piano, I can teach you how to play it, but you might make a hell of a din. And it's the same with trading. Some people overanalyze this and make it far too difficult, and they are normally the people with mathematic backgrounds, the engineers, the computer programmers, etc. All struggle a little bit, I've found, with trading. The best people out there by far are women, because believe it or not, they follow rules. I'm being facetious, Linda. And secondly would be airline pilots, because they're trained to follow rules, and if it's not working, they go to plan B very quickly. So let's look at this crude coming up here. We know that we're in weekly, monthly downtrend on crude. We've had a rally back up, and today, this is interesting for you, Linda, if this closes down underneath the barrier here, the stops rather, this will swing itself, and the close is less than the open, etc. That will go into downtrend. So there's a downtrend being set up there, and in fact, if I false this, would it show it to me? Well, it hasn't closed, that's why it's still doing it. But that's being set up, and then we have heating oil, which had a hell of a belter down, and again it's showing that this will go into downtrend again, Linda. And natural gas, just sideways. You wouldn't want to trade that at all. And when I say why, because this is just so horrible. Look at it. Until there's a defined trend that comes up here, you wouldn't want to touch that for anything. And that answers somebody else's question all about risk. You're taking risk on here. Okay? So you will be very careful. Now let's get into the metals, because there's a lot happening here, and I've done exceptionally well on my metals trading. All of these here I've done really, really well. So now we have a short, and you can see I would have taken that short because it's with my monthly. My weekly is in congestion, but I've got 3 weeks of selling volume here, and the bias is to the downside, although this is green, telling me that 1 or 2 of the trends clicked into the upside. I just know that here the long term, the conservative setting is down. Okay, I'm taking a bit of risk on because this is a dark green, but I'm not taking a huge amount of risk on. There it is. Let's look at gold, which I'm absolutely itching for this autumn to get trading on this. This is going down. I'm waiting for a re-entry on this somewhere down here, probably down around the 1200s. Might even go to 960. Everybody's long in the world on this, and as soon as it breaks, the stops are going to be run big time. GDX, which is the gold miners index, this is the major gold miners, precedes the bullion price, the gold price, so it's a great one to have up there. Let me just show you. If I copy that window and put it across over here, and you will see what I mean. So there we were there on the gold miners. So the gold miners were being sold off, and that resulted in this move down here. This is a great precursor to what is happening on gold. GDXJ, whoops, I don't know why that's gone like that. There you go. These are the junior gold miners. These are the small gold mining stocks. It's hairy, goes up and down. I suggest you don't trade them. Newmont Mining, my favorite, which really done well on. As you can see, I got my entry right back here at 21, at 25, and that all came in up through here. BHP. Now BHP is an interesting one. That's a horrible chart. I'm having this up because it is the world's largest miner. It's got problems in South America where one of its mines contaminated a river, which in turn contaminated some villages, and has had a huge fine. It is also exposed to oil, but it's huge in iron ore, and of course China isn't buying it from them. But if I show you this chart, let me just show you where it's come from. You'll be absolutely amazed. So this has been, at one stage, the high of the up move on here was 104, and that was on the 29th of April 2011. Look what it's done since. Just look what it's done since. Unbelievable. So I have it there because at some stage it's going to become very sought after as the world's largest miner, and it'll move. I wouldn't touch it with a barge pole because of these profiles at the moment, but I like looking at it. And then we have platinum, exactly the same as the golds. You can just see that coming in. Look at my volumes over here, guys, 1, 2, 3 weeks. Don't have any selling volume on my monthly, but I have monthly downtrend here. And we also know something else, and that is that the Hawkeye stops act as very good support and resistance, and the monthly went up to the Hawkeye stops and touched them and backed off again. So this is all set up. Am I in it? No. Silver, again, a good precursor. This one has a precursor of gold. This one clicks off. Remember, it goes down a lot faster and comes up a lot faster than gold, and it also has a commercial value in it as well for industry. Then we come to the grains. So we're just coming out of the harvest periods on a lot of the grains. Soybeans, Brazil's one of the biggest ones, but that's in the southern hemisphere, so that comes in later. So you can just see that we've got good setups there on our volumes. Can you see? Soya meal, we got exactly the same again. Look, 1, 2, 3, 4, 5, 6, 7, 8 weeks. 8 weeks of selling volume in this. There's broken down there quite clearly. We've got our wheat, which we showed yesterday. We got our corn, and then we've got feeder cattle, a bit choppy. As I said yesterday, once you see prices going down in the grains, you will see that live cattle will go down and live hogs will go down because that's their feed stuff. Okay, and you can see that live hogs yesterday have bottomed out and buying volumes coming back in. So, and then we come on to the softs, and this is sugar. Coffee is a great market to trade, but be very, very careful. It's a huge, huge contract, and only trade it when you're experienced. And cotton. And talking about cotton, how many of you have read Reminiscences of a Stock Trader? If you haven't got that book, do go and get it. It's a terrific book to read. So go and get that, because in that the guy was always trading cotton, and it's a great story. And then we come to the indexes, and all these indexes look as though they're rolling over. Can you look at the US CAD long term? Yep. So we've got the ES rolling over. As you can see, it's down 575. It's 5 handles down as we talk. We've got the NASDAQ. That's rolling over. Double tops up here. The mid cap, choppy, going into its congestion phase here. We've got the Russell. Again, congestion phase. Some bars of selling volume here. Then we got the Dow, congestion phase, no demand, red selling. It's not looking good for September, let me just tell you that. It's got to really start doing something. Somebody else, what was the one? US CAD long term. Let me do it on here. US, further down, US CAD, long term. Oh, there we go. So why don't, who asked me? Well, that will tell me. I can't pronounce your name, Mr. Gilchrist or Mrs. Gilchrist. Riaj. R-H-E-J-A. You can see on the monthly we've gone into congestion. We've got red selling volume bias to the downside, and that's for the US, so strength for the Canadian. Again, over here, weakness on the weekly for the US, and then we come over to nothing but chop over here. You wouldn't want to trade this for anything at the moment. And let's just drill down a bit in time, see if that gives us a better clue. And let's put up the 480 minute in there. Well, that's a bit smoother for us, and that is giving us a long up here. But again, you're taking a lot of risk on to trade that. There are better opportunities out there for trading currencies than this US CAD. There is a long there, but it's not a long that I would elect. You've got buying volume in your favor. You've got no demand volume over here. You know, you've got selling volume over here. Yes, you could have taken that for a very low run, particularly after this magenta wide bar, which remember is twice average true range over 20 bars, is taken out on that one. You knew there was a bit of strength. But if you'd taken it, you wouldn't have gone for much of a run on it, let me just tell you. Because of the profile of this, it's just pure chop since May, look. Since May to here, it's just pure chop. Okay. You just check questions, please. Okay, everybody, let me just take you back for you guys who are the forex traders, and particularly Jeffrey, who's in the room. Jeffrey, go and look at this. I know that you've got the chutzpah to be able to trade 480 minutes, so get in there and start doing this, trade it in harmony with the daily fat man, and you'll see that you get some pretty nice runs coming up. Well, guys, there's no more questions coming in, and we're coming up to the 1 hour point. So I'd like to thank you all very much of being part of Hawkeye, and I'll see you next week. Thank you all very much. Bye, everybody.